Did you know that most loan modifications get denied because time runs out? But here's the scary part. Most people don't lose their homes because they're not trying. They lose because they wait too long to ask for help, or they don't know what to do or say. Now listen closely, because what you do next will decide whether you keep your home or not. If you don't know your loan type, the investor's rules, your state's foreclosure process, or even have verifiable income, you can go right from "I need help" straight into "I have a foreclosure auction date" before you even can catch your breath. Now, I know you may be scared and exhausted, thinking that your home could be snatched from you at any time. But there is hope. But hope only works when it's backed with the right strategy. In this video, I'm going to show you exactly how to apply for a loan modification the right way. What to say, more importantly, what not to say. How to identify what loan modification programs goes with your loan type, and how to discover your state's foreclosure process so you can stop wasting time when you really don't have time. We'll cover the typical foreclosure timeline, the difference between your servicer and the investor that actually sets the rules to determine whether a loan modification is even possible. We'll also talk about how to deal with the foreclosing attorney and exactly how to package your loan modification request so it gets reviewed instantly. This video is also the start of my foreclosure series. So if you're trying to protect your home, save a deceased loved one's home, or your place of business from foreclosure, you're in the right place. Stay tuned to the end of this video because I'm going to tell you exactly what to do immediately if you're denied, what to do immediately if you're approved, and the 3 traps that cause most people to redefault on a newly approved loan modification. Now, this video is going to be long and it's packed with information that I'm certain will help you. So be prepared to take notes. And if you need to skip to the parts that's applicable to your situation, please do. However, I highly recommend that you watch this video in its entirety. So let's start off with understanding your loan type. You have FHA, VA, USDA, conventional hard money loans, and privately held notes. FHA, VA, and USDA loans are going to be backed by the government or guaranteed. That means any types of loan modifications that come through the government will be subject to these types of loan modification programs. So I don't know if you remember the Making Home Affordable Modification Program that was out back during the Obama years, or more recent, the COVID Loan Modification Program. So any lender servicing these types of loans, these homeowners would have been eligible if they met those guidelines for those types of loans. Conventional loans do not always follow those types of mortgage modification programs. However, most of them will mirror those programs, or they have their own programs that's very similar. Hard money loans are going to be typically based on equity and your ability to pay. Loan modification programs are not typically allowed under these types of loans, simply because the lender is aware that there's equity in a property. They have low loan-to-value ratios, so if you default, the mortgage company knows that they're going to get their money at foreclosure. Privately held notes are typically going to be like land contracts in some states. In other states, it's called contract for deed. This is where the owner of the home sold the property and they became the lender. Now, when an owner takes back the note, they typically don't have the financial resources that large mortgage companies have. So modification programs are not going to be government modification programs, but they can always be negotiated if you go into a default situation. These are case-by-case basis. So if you have a privately held note, do not automatically assume that you're going to be able to get a government modification, because that's typically not possible. Your lender may just be servicing your loan. So you need to be very careful about what you hear on their greetings and on their websites. I believe this information is extremely misleading. You may hear things like "we're here to help" or "helping homeowners is what we do." I want you to please understand that very well may be true, but the chances of your loan modification or short sale getting approved is going to be solely predicated on the investor's rules and not the servicers. Before you call your lender, download my Lender 10 Questions checklist. It's going to tell you exactly what to ask for before, during, and after you submit your application, so your file doesn't disappear in the system or fast-paced straight to denial followed by foreclosure. Once you understand your loan type, you can ask your lenders what program, if any, they offers that can help save your home. Now let's talk a little bit about understanding your particular situation and getting yourself prepared to request the assistance. How did you get behind in the first place? Has your situation been resolved? Is this situation likely to reoccur again in the future? And are you able to make payments moving forward, either at the same amount or at a higher amount? This is called a hardship. And a perfect hardship is when a situation happens, it's been resolved, it's unlikely to reoccur again in the near future, and you're ready to move forward with making new payments. A bad hardship, however, is something that's going to be permanent. It could be an accident at a job that's making it where you can't work that type of work any longer. It can be the death of a co-borrower or them being disabled, something that's going to permanently affect your ability to move forward with making your payments. That's typically a bad hardship. Click on the link below to download my Perfect Hardship Playbook, where you'll learn exactly how to write the perfect hardship your lender can't ignore and how to fix a bad hardship. What is your current household income? This is the main question that most mortgage companies want to know in the event that you're requesting assistance. Did you know that your lender will consider all income for anyone living with you? This is called a non-borrower contributor. Now, be careful because not enough income will cause your modification to be dead on arrival, and too much income can cause your mortgage payments to increase. Modifications are approved based on a very delicate balancing act. Your debt-to-income ratios, can you afford your new modified payment now and in the future? Also, do you have a down payment, which is basically called skin in the game? The rule of thumb for your income is that your monthly payment, principal, interest, taxes, and homeowners insurance must be less than 1/3 of your total monthly income after taxes. If you don't fit this typical requirement, your lender will consider using a non-borrower contributor's income to help. You are not applying for a new loan, so this option is definitely allowed by most lenders. Start with the household income from your family members and/or roommates. If this is not possible, you can use the income from a person that's not living with you or related to you. The contribution needs to be proved, and that person may have to fill out a non-borrower's contributor form that needs to be turned in at the same time you turn your modification package in. Also, a soft credit report may be pulled by the lender for verification purposes. Good credit is not a requirement in this particular situation. There are other things to consider as stated at the beginning of this video, such as people that wait too late to ask for assistance. Have you received a foreclosure letter from an attorney yet? Do you have a foreclosure auction date or court hearing scheduled less than 37 days from the time that you're making your request? The Consumer Financial Protection Bureau, CFPB, has rules requiring that a completed loan modification or short sale package must be turned in 37 days prior to your foreclosure auction date or court hearing in order for the auction to be placed on hold. It is vital that you understand this before you request assistance from your lender, otherwise your application will be dead on arrival. Now, most of the time, your lender will not tell you this information, giving you what they call false hope when your application is submitted. Now it's time to contact your lender. However, it is imperative that you do not communicate with them until you fully understand what's going on, what to say, and how the loan modification process works. Please make sure that you download my Lender 10 Questions checklist to make sure that you are prepared to speak with your lender at that time. Also, make sure you're mentally prepared and calm. Remember to ask questions that's outlined in the checklist. Do not be emotional or expect your representative to be your counselor or therapist. Most importantly, do not become personal, use profanity, or assume that the person that you're speaking with has the authority to modify your loan or stop the foreclosure process. They are there to gather information, give you general information about the loan modification process, and let you know exactly what paperwork is needed and how to submit it. You are what they call a non-performing asset, basically a business transaction, and you need to treat your lender in the same exact way. Explain that you're experiencing a hardship and that you wish to keep your home and what programs are available that can make this possible. Sometimes your lender would like to do what they call a phone interview. This is basically an application over the phone. This is also to help to determine your eligibility. So please be ready to give your financial information over the phone at that time. If you do not qualify at this stage, you will not advance to the next step. Most likely a denial letter will be sent. Sometimes a rep will tell you whether or not you qualify, and if you do qualify, what's the next step to move further with your interview. Most lenders have online accounts, and if they do, please set your account up if you have not already done so. They will tell you how to access the application online and how to submit your request. Please have your computer, tablet, or smartphone readily available so you can walk through the process with them step by step. Also, ask the rep exactly how the package needs to be submitted. If you can, always submit your package through your online portal. This will speed up the process, give you real-time responses, and allow for your documentation to be uploaded instantly. Also, complete a written application along with your supporting documentation. Do not allow your lender to present your application virtually. This is absolutely vital because any event that you need to file something legal to stop the foreclosure action, any event that your modification has been denied. Modifications require 2 sets of paperwork. One of them is the lender-specific documents, and the other is your supporting documents. The lender-specific documents will include, but not limited to, the RMA, Request for Mortgage Assistance, the 710 form, this is better known as the actual application, a 4506 tax transcript request form. Even if you provide your signed tax returns with your loan modification package, your lender will still need the actual filed tax returns directly from the IRS. This prevents fraud and provides a true income verification. But I want you to keep in mind, this is based on last year's income and not what you're currently making today. So do not be in fear. A hardship affidavit, which is not the same as a hardship letter. Hardship affidavits are a pre-printed form giving a variety of different hardship issues, and you just check the one that's applicable to you. The last one is going to say other, and other is a place where you can actually fill that information out. A hardship letter is going to be a professionally written letter that explains exactly what your hardship is. And as we talked about earlier, you know exactly what a perfect hardship is before you submit it to your lender. It is rare that a mortgage company will request a hardship letter along with a hardship affidavit. It's either one or the other. Now let's talk about your supporting documents. You need to have 30 days proof of income, check stubs, profit and loss statements if you're self-employed, the last 3 months bank statements, all pages, and any employment letters. Any financial documents from your non-borrower contributor and a utility bill which proves your occupancy. Your contributor's financial support and application, signed tax returns. Even if you filed your taxes electronically, you must sign your tax returns, and a letter requesting assistance. Now, this letter should be typed and professionally written. ChatGTP can help you prepare the proper letter requesting assistance. Your request must be in this particular order. Start off with your letter requesting assistance, your RMA or 710 application, the hardship letter or affidavit, the 4506, all check stubs, profit and loss statements if you're self-employed, bank statements, remember all pages. So if your bank statement says 1 of 5 pages and that 5th page is blank, include that 5th page because this is actually considered an incomplete package. It's very important. Your non-borrower contributors paperwork and your utility bill. Now you want to make sure that all pages are complete, signed, and dated. It is highly recommended that you write your account number in the upper right-hand corner of each page. Now, I know that's a lot of work, but believe me, your mortgage company is receiving hundreds of documents. And this is one of the main reasons why paperwork gets lost, because the mortgage company misplaced your documents because they don't know what documents go with what. So I highly recommend that you put your account number in the upper right-hand corner on every page and be consistent. In other words, don't put the account number on the left page, on the left side of the page, and then turn around and put it on the right page. Be consistent with every page in your package. I recommend that you scan your documents as a PDF file, email them to your lender's loss mitigation department and your single point of contact directly. I also recommend that you fax your documents. Now, if you could upload your documents through your portal, I highly recommend that you do this instead because this is always quicker and you'll get a quicker response. Please be sure to get an email and fax confirmation receipt. Never send partial information or assume that your lender has received certain information already because you sent it at another time. If this has happened to you where you've applied for assistance and you told your mortgage company, I've already sent my application to you 2 months ago, and now they're asking for updated information or they're asking for a new request, always package your documents in a way I just told you and send everything all at one time. Otherwise, your package will be considered incomplete, and I guarantee you that'll be an automatic denial. Always send a complete package. Now, you do not need to send the same package multiple times on different days, or this can cause an interruption in your process. So send everything at one time and on the same day. You want to wait 24 to 48 hours before you contact your lender to verify that they have received your complete package. Make sure it's all pages. Do not expect an answer at this point, but you definitely want to verify that they've received all pages. You also want to ask your lender when you should follow back up, and have you been assigned a single point of contact yet? If so, make sure you get your single point of contact's complete information. Now, regardless of when they told you to follow up, I recommend that you contact them at least 2 times a week until your application has been approved or denied. So, for instance, if you have been denied, no one is going to call you from your mortgage company and tell you that. You will receive a letter in the mail. Calling them and finding this information out over the phone will save you 1 to 2 weeks, giving you more time to request an appeal or to represent your case. At some point, you should receive some type of communication from your single point of contact via email or by telephone. This typically takes about 3 or 4 days by the time your completed package has been turned in. Now, the loan modification process typically takes 30 to 90 days in some cases. If you submitted a completed modification package less than 37 days before your foreclosure auction, be sure to ask your lender to postpone the auction. If it's already scheduled, do not automatically assume that this will be done. Now, keep in mind that this 37-day rule is not a law. I've seen lenders stop foreclosure 10 days before the foreclosure auction. So the key is be persistent and not be fooled. So here are the documents that you need to keep updated. Do not expect your lender to tell you exactly what expires and what doesn't. This is the part that most homeowners don't understand, resulting in a denied application and fast-pacing you directly into foreclosure. So here's what you need to understand and when. The application itself, every 90 days. Check stubs should be updated every 30 days. The 4506, usually every 90 days as well. Bank statements should be kept up to date monthly. Until your loan modification is complete, you need to keep these documents up to date. All of these things are your responsibility to keep your lender up to date with. Even if they don't ask for this information, you should automatically send it to them based on the schedule that I just told you to keep your file active and under review. If your lender asks for updated information or additional documents, please send it at the time that they request as soon as possible. This is another reason why most people get denied for taking too long to send requested documents into the lender. While you're waiting on your review to be complete, if you've not done so already, this is the time to understand your state's foreclosure process. You want to know things like if your state has a statutory right of redemption, and if so, how long. This is a simple search on Google and ChatGPT, which I highly recommend that you use both. Always cross-reference everything multiple times, especially when it pertains to your home. You also want to find out if your state's foreclosure process is judicial or non-judicial. The redemption period, if your state offers it, means that the redemption period, as in the state of Michigan, for example, is 6 months from the date that the property goes to auction. You can pay all of the back payments, penalty, interest, attorney fees, and the principal balance owed to your mortgage company to redeem your home. Now, if someone has purchased your home at auction, they have purchased what they call a post-dated deed. And this property still belongs to you, and you still have the right to redeem it by paying the amount that the investor paid for the property, plus a specified rate of interest that's based on what your state allows. You can also still sell your home during this period. You might want to contact a real estate attorney or the foreclosing attorney to verify your state's foreclosure practices to be sure. Food for thought. The foreclosure attorney do not have the authority to modify your loan or approve a loan modification or forbearance agreement. They are there to collect the debt, provide reinstatement and payoff figures, and conduct the foreclosure auction of your home. Now, there are some web-based foreclosure houses, such as hutzoo.com and auction.com, that also conduct foreclosure auctions over the internet. Okay, so congratulations, your loan modification has been approved. Now, if you called your lender and they told you this over the phone, congratulations. What you want to ask your lender is the terms and the expectations of this newly approved modification. Your lender may want you to sign the documents in front of a notary and witness. You may have to sign the documents in black ink only, so make sure that you follow the instructions and return the documents exactly as your lender indicates. Did you know that most loan modifications are treated like refinances? So if you have a junior lien, any title issues, maybe an IRS or income tax lien, your loan modification can be denied because your newly modified loan must be in first position. Look out for my upcoming video where I'll show you how to handle junior lien holders so your lender remains in first position and your modification can get approved. If your modification has been denied, here's what you need to do first. Number 1, don't panic. Find out the exact reason and see if there's something that you can do to make an adjustment. request an appeal, and find out what the appeal process is and the timeline to request an appeal. Now, here's the rule for appeals. Your situation must be different from the original request. Otherwise, the mortgage company is just going to cross their T's and dot their I's and give you another denial. If the lender and/or investor do not offer any types of terms that can make your payments more affordable or do not offer any type of loan modification programs, period, an appeal will not change their minds, even if your situation has changed. No means no. Back in the day in 1988, when I first started doing foreclosure prevention, there was no such thing as a loan modification. The only way to save your home is with a forbearance agreement, which basically is a repayment plan, and you typically had to have at least half of your back payments as a down payment. This is the reason why earlier in the video I mentioned that you should have a down payment available, basically skin in the game. Because if your income is insufficient or the mortgage company do not offer any type of loan modification assistance or forbearance agreement, they may be willing to accept a payment plan with a down payment. I've helped thousands of homeowners save their homes from foreclosure with this option, even if their lender never mentioned it. Or you can make a substantial down payment and make payments on that unpaid balance over a period of time. There are many versions of a repayment plan or a forbearance agreement. All of these are guaranteed to increase your monthly payment, but it will stop your foreclosure. So this is a time that you can become creative. If you want real results, you need a system. My full training includes the checklist, cover sheets, call scripts, and follow-up plan to keep your lender from stalling or denying your file. You can get this today for just $97.99 before you waste any more time guessing. Now, if you received a denial letter, your denial will include other options such as a short sale, deed in lieu of foreclosure, which is technically a voluntary repossession, or the full reinstatement of your loan. None of these options will allow you to keep your home except for the reinstatement. However, if you use one of these options wisely, it will buy you time to gather more money and save your home. If your file is moving forward with foreclosure, click on the link below to sign up for my Secrets to Interrupting Foreclosure program. This will stop your foreclosure sale, again, buying you more time to utilize other options that's best for you and your family. Sometimes in life, we have to take a step back in order for us to move forward. Please know that this is not the end of your world, only a page in your book that's about to be rewritten. Now, as promised, here are the 3 reasons why someone will redefault on a loan modification within the first 12 months and my solution to resolving this issue and preventing foreclosure. Number 1, the payment wasn't affordable in the beginning. A lot of modifications work on paper, but in real life, when bills hit like groceries, gasoline, child support, child care, medical expenses, if the new payment comes up and leaves no margins, guess what? A new foreclosure will occur. Number 2, escrow shock. Taxes and homeowners insurance will change your payments. Even if the principal and interest looks manageable, escrows can jump during an annual review or insurance increases. People may think that they're paying a modification amount, but in reality, when the taxes and homeowners insurance increases, so will the monthly payment. Number 3, they didn't treat the first 6 to 12 months like a no-mistake zone. Late fees, confusing due dates, trial payment plans, paperwork that they've ignored, auto pays that they didn't set up, or not saving proof of payments. A small slip-up can trigger a default fast, especially during a trial period or right after the conversion of that permanent modification. Here's another FYI. Trial period modifications do not have grace periods. If the payment is due on the first of the month, the payment must be paid on the first of the month. Please click on the link in the description so you can see my video, what happens during your trial period modifications, so you can better understand exactly how they work. Here's what you can do if you feel like you're about to default on your newly approved loan modification. Contact your lender immediately. Explain that you have an emergency or another set of hardships. Just because you had one hardship do not make you exempt from having another one. It's called life. What they can do to offer any assistance to prevent any default. In many cases, they will set up a temporary repayment plan to get you back on track. But do not ignore this potential problem that's waiting to happen. My full loan modification training will walk you through step by step exactly what to say, what not to say, how to rebuild your package, and how to protect your foreclosure timeline so you don't lose your home. Now that you understand the truth about loan modifications, it is not just about a phone call. It's about verifying your case. When your story, your numbers, and your documentation all line up and you understand how to properly follow up the right way, you stop being denied and overlooked and now start being reviewed and approved. If this video has helped you, Please subscribe because I drop real life strategies like this to protect your home and your future on a weekly basis. And if you want the checklist and my full training system, grab them in the description below. Don't hope this work, make this work. Run your loan modification process like a professional. I'll see you on the next one.